Good evening. We're on the US dollar Japanese yen at the moment using ITM M.Stat. Fresh signal here to the long side. Predicted direction is long. We've just bounced off of the middle EMAs. Perfect trade setup for a long trade here. We're going to go aggressive today. 15-minute expiries only. It is currently 2014. We'll shoot for a 2030 to capitalize on small movements instead of long movements. 75% payout on this trade here. And once we're into the trade, I'm just going to zoom in on the chart here for a better view. We're into the trade and we'll come back to you just before expiry. All right, back again. Currently 25 seconds remaining to this trade. As you can see, the entry point for the trade serves as dynamic support. That is one of the interesting features of ITM M.Stat, that not only does it allow you to enter into a trade at the most appropriate high probability moment, that middle EMA region then goes on to serve as dynamic support in the case of long trades. And for the flip side, in terms of short trades, it serves as dynamic resistance. Now, the trade has expired in the money. Once the calculation of expiry is complete, we will have a $750 net return on this trade. And since we've had a fresh bounce, if you see that wick over there bouncing off the middle EMAs, we are looking at another high probability entry condition based on ITM M.Stat's prediction of a long trade here. So we're going to wait for expiry to complete here for the profits to be released, and once that does happen, we will shoot for another trade. Those are the rules of the system. Wait for the existing trade to complete, check for bounce off of middle EMAs, also check direction shown by ITM M.Stat. If everything is lined up, you are in a high probability scenario. So the trade has now completed calculation of expiry. We have booked the profit. 750 is now in the account. Looking at that fresh bounce, very easy to get into trades like this with ITM M.Stat. So we're going to go back to the platform, enter into a fresh US dollar Japanese yen position here, again expiring for a 15 minute expiry here. $1,000 trade, fixed investments, no change in investment amounts unless and until we see a losing trade, in which case we will go into evasive action mode. The trade is now in, and I've zoomed in on the chart. Fluctuations when you start off on a trade are perfectly normal. Wait for the trade to expire and probably don't even look at it till it expires. See you soon. All right, so this trade has expired outside of the money. Notice we are trapped in the retracement zone. So perfect timing for a double up trade if the ITM M.Stat position is still long, which it is. We have now seen here a recurring retracement, which is just grounds for yet another trade in the same direction. Only this time we have to make back the loss on the previous trade if our equity supports it. In this case, we will double the investment since the account equity supports it. If your account equity does not support it, please continue using fixed investments. That is the suggestion in these situations. So we've gone for another 15-minute expiry here. The trade is now in. Just zooming in on the chart here. Perfect. So we'll come back to you soon. All right, back again, roughly 16 seconds remaining on this trade. As you can see, the evasive action trade managed to capitalize on the actual movement. The movement we were aiming for in the losing trade was trapped in a recurring retracement where we had a bounce off of the middle EMAs, but price continued to retrace for a little bit, which is perfectly fine. Not every bounce off of the EMA will immediately shoot into the zone you're after, but recurring trades like this, where you go for an evasive action move such as this one, do capitalize on the move you were intending on capitalizing on earlier on most occasions. So we have now expired in the money with a $2,000 investment here to yield a $3,400 gross return, resulting in a $1,400 profit. Now in the previous trade we invested $1,000, so $900 of that was lost and $100 was returned to the account based on the currency pair and the asset type. On this trade, we have scored $1,400, so that makes back the $900 from the previous trade and gives us a nice profit of $500 on this trade to take home here. So the trade has now expired. Profits have been booked. This is the easiest way, probably the simplest strategy you can create with ITM M.Stat, whereby you can easily get into trading positions with a high probability of success. And even if a trading position goes into a loss, you can assess what the chart is saying at the time. If it's a recurring retracement that your trade was trapped in, which is very normal, it's perfectly fine for that to happen. You can, given the situation and given what ITM M.Stat is saying on the chart, and if your account equity supports it, get into an evasive action recovery position whereby if your equity supports it, you can recover previous losses in high probability trading scenarios like this. Thank you.